coming from large developers who are both in the residential and the commercial market are indicating that not only the velocity of transaction has improved, the rentals have started improving. So let's connect the dots here. Let's talk about a region where some would say the RERA impact has been rather very impactful, because in the NCR region, not too many large listed real estate developers are there now. And one such real estate builder is Max, the Max Ventures Group. And it gives me great pleasure to bring on board Sahil Vachani, CEO and Managing Director of Max Venture Industries. Sahil, it's your first time, at least we are interacting on the morning show, so a very warm welcome and great to have you on ET Now.
Thank you for having me. It's a pleasure to be here.
I guess my introduction was in a sense a question that we understand that the real estate demand and pricing has improved immensely in the NCR region. Can you quantify that for us? In the projects which you manage and in the construction which you are doing, what has changed in last 6 months?
No, thank you. I think you're absolutely right. Particularly in the National Capital Region, there has been a significant uplift in the commercial real estate space, driven by 2 or 3 key factors. First is the flight to quality. I think post-pandemic, there was a disruption to the office space industry. And once we are coming out of the pandemic, we are seeing most corporates wanting to move to developments that provide hygiene, comfort, safety, and most importantly, are able to create an environment to foster innovation and collaboration. We at Max Ventures have prided ourselves in doing this. In fact, well before the pandemic, our tagline was "Work Well," which was about bringing wellness to the workspace. So what we have done with Max Towers and our second development, Max House, is a testament to this. To the extent, and to your specific question on demand, I can give you perspective from our experience, which is at Max Towers and Max House. We saw more leasing in 2020, which was practically a lockdown year, than we did in 2019, which was the highest commercial real estate leasing numbers that the industry had seen. And as we track 2021, we are continuing to see this sort of momentum, particularly for developments like I mentioned that we do.
I'll get into specifics of your real estate projects, but Max Ventures currently houses a film packaging business also, and also a real estate business. Hypothetically, let's say if I'm interacting with you exactly after a year, what will be Max Ventures? Will both the businesses continue, or you will only have one business and you will exit the film packaging business?
Tough question, but I think what you will see moving forward is a growing focus on our real estate business. We see a huge opportunity in the National Capital Region, both in the commercial and residential space. And you will see that the share of the real estate business in the overall pie for Max Ventures will continue to increase.
Can I read in between lines? As journalists, we love to read in between lines, but since you're a listed stock, it's a live interview, I don't want to get it wrong. Are you indicating that you will exit your PPO business, your film packaging business, or the relevance of that business will go down? What would be Max Venture? Just a real estate company or a venture firm which has 2 businesses? That's the question which we want to understand.
I'm not, as a listed entity, I'm not able to make that sort of future guidance. But yes, I can give you the direction in which we are heading, which is for us to emerge as a strong and a preferred real estate brand in the National Capital Region across the commercial and residential verticals. And we have seen that we have started on that journey already. So I think that's going to be our foray in times to come.
Okay. How much real estate have you leased out? You said that it's been a record-breaking year for you. How much real estate have you leased out? Could you give us a sense of the rate at which you've leased out? And I would imagine these are long-term contracts also.
That's right. So I can share that we have leased in our flagship development, Max Towers, 96% of the total area. And this I can share is at a premium of anywhere between 25 to 35% to the immediate micro market, and approximately 45 to 50% premium to the Noida market. In our second development, Max House, which is in Okla, again, the early signs has showcased to us that we are able to lease out to a premium to the micro market, another 20% premium to the micro market, and we are very confident of achieving 100% occupancy over the next few months. So both our developments, again, centered around the philosophy of wellness, of bringing work well as a concept to corporates in India, I think has been accepted very well.
Real estate developers, the big ones, all of them don't have a unique, they have a different model. I mean, there is no uniqueness. There was a time when real estate firms would buy the land, build on it, sell on it, make profits. But you've got developers which are currently doing joint development. There are asset-light models which are likely to, which some real estate developers are following. There are some real estate developers in the NCR region who do not, who built it, keep the inventory and sell when the prices, when the demand comes. What model are you likely to follow? Asset-light or inventory-led model?
So first and foremost, our model is actually putting the customer experience at the center of every development. So our model is not led by whether we are buying the land or doing a joint venture or joint development, but first and foremost is putting the customer at the center of each and every development to say, can we create an experience for the consumer that is differentiated, and can our developments be customer and end user led rather than investor led? So with that in context, we are looking at all options. And have already followed all options to look at and followed multiple opportunities to look at the method of development. That could be acquiring the land and building on it, joint development, joint venture, and so on and so forth. So we are open to and are evaluating all opportunities. In the first two assets that we have done one of them was a distressed asset purchase. The other was an outright land acquisition. And the third was the first project that we did, which was a residential project, was a joint development. So we have already a track record of adopting both models. But more importantly, the lens we look at it slightly different to the traditional real estate lens is putting the customer at the heart of our experience.
Right. Sahil, could you put it in numbers? What's the total developable land that you're looking at, these new projects and the capex that you just highlighted?
Sure. So we are looking at in 4 years from now to be able to develop 1 million square feet of commercial real estate every year and 1 million square feet of residential real estate every year. To your second question, in terms of the capex, we are almost net debt zero. We have a very small amount of LRD that we have. So there is a huge headroom that we have both from an LRD perspective, and also, as you may have seen, we have done a platform partnership with New York Life Insurance Company, our erstwhile partners at Max New York Life, and they've come in with at a platform level to support the commercial real estate growth journey. Our new project, Max Square, on the Noida Expressway, is a joint venture, 51 Max Ventures and 49 New York Life. So with a combination of our balance sheet strength and the platform partnership with New York Life, we have the requisite capital to be able to grow and scale both verticals, the commercial and residential, to be able to achieve our aspiration of 1 million square feet of office and 1 million square feet of resi every year. And I may add that from a market share perspective, this is, we believe, a conservative assessment for a brand like ourselves, focused on the national capital region and doing what we are looking to do from a consumer experience perspective.
Sure. Sahil, that's on the real estate side of the business, but let's also talk about the specialty films business. Just wanted to understand, because in our earlier interactions, you've mentioned that work on the new CPP line is expected to commence by the second quarter of the fiscal. Talk to us about the timelines and the kind of volume trajectory that you've set for yourself.
So the CPP line is 7,000 tons per annum and is expected to be commissioned in July, August of 2022. We believe that the combination of our specialty BOPP and the CPP together can offer a very strong solution towards the recyclability trend that we are focusing on, which is the single layer mono-material trend. And we are one of the pioneers in the industry to be able to bring recyclability to its fore and provide completely sustainable solutions. And the entire circular part of the circular economy that we are looking to participate in to our customers, that not only do we look to provide the sustainable packaging products, but we are also setting up a small unit to be able to recycle this for them. So in that sense, the entire circular economy, particularly for plastics, and focusing on the recyclability aspect of the products. So that's the strategic direction in which we are heading, and the expansion in CPP is focused on that in combination with our already developed specialty BOPP range.
Good morning, Sahil. It's Nayanthara. You, of course, given me an interview in Punjab where we shot from this factory which houses the specialty and the filming business. But I want to go back to the new story, which is real estate, the comeback story. You've given us a sense of how you're going to be expanding 1 million square feet. You're convinced that commercial rentals are only going to go up. But if I could ask you also, from a group level, you're spearheading commercial real estate, but your partner in business and life, Tara, is of course doing the residential part, which is to do right now with assisted living. How should the market see all of this coming together? Is Max Group's next big bet, whether it is with Max India or with Max Ventures, real estate in India and of course overseas?
Hi, Nayanthara. No, absolutely great question. So Max India is focused on senior living, and they are looking to create a platform for senior care. One element of that platform is residences for seniors. In addition to that, they will have care homes, care at home, and medical products. Whereas Max Ventures, we are focusing on real estate to scale our residential real estate and commercial real estate business. Your comment on the future, I think we are very bullish on real estate, particularly in the National Capital Region, for the following reasons. We believe there is a huge trust deficit that has existed. For a population the size of the National Capital Region, there are less than a handful of developers today. And we believe that with the expertise that we bring and with our focus on bringing the customer experience at the core of what we would like to do, there is a huge opportunity for us as a group to be able to create tremendous value, as we have done in the past with our multiple other businesses, but to create tremendous value for our shareholders in the real estate business moving forward.
Now, the Max Group has had a long-standing relationship with New York Life that has been reiterated in recent times. You just in one of your answers spoke about it again. Going forward, what can we expect from Max and New York Life?
So just to put it in context, New York Life has approximately $600 billion of assets under management at a global level. We are their only partner in India from a real estate investing perspective. And we've just started the journey. And I think with the track record that we have shown, which is success in both our developments and moving forward, track record in turning around distressed projects, track record in construction execution, track record not just in leasing, but more importantly in asset management, and creating a differentiated consumer experience, which then translates into a premium that we get to the micro market. I think that track record we have showcased now a few times over. So we are very bullish that as we are able to continue to do this, the partnership with New York Life will only deepen. You're very well aware that this partnership is already 2 decades old. New York Life had a very successful stint with us at Max, which was then Max New York Life, and has come back again, and also another successful stint at Max Ventures. I may mention that they are also a 23.5% shareholder at the listed Max Ventures level, and in addition participating at a platform level as well. So they are extremely invested and committed to growing the story of commercial and residential real estate with Max Ventures in the NCR.
Sahil, great to have you on the show today. Thanks so much for taking the time out, and I do hope you'll come more often.
It's lovely being here.